I'm going to teach my simple, almost mechanic, repeatable swing strategy, how to take setups using fundamental analysis made simple plus some market structure. I'm going to show to you a process, the exact same one that I run every week, and by the end of this video you'll be able to repeat it yourself, because that's the whole point of a strategy. It needs to be repeatable, otherwise it's just gambling. The whole things come down to three questions. In order, which direction does the asset that I want to trade have? And fundamental gave us this answer. Where do we enter? And structure gave us this answer. And how much do we risk? And that's the part that keep you alive and allow you to pass prop firms and not blow up your account. Most people start at step 2. So they open a chart, see a pretty setup, and decide to take it with no idea whether the bigger picture agrees or not. That's backwards, and it's why they get chopped up. We start at the top, so we start at the fundamental part. So step 1 is direction. And I know the second I say fundamentals, half of you want to click away. But just keep in mind that we are not economists. You just need to answer one question, which is this currency unbalanced, strong or weak right now? The way I make this simple is I score it. So I look at a handful of factors: the trend, the seasonality, what the big player are positioned for growth, inflation, jobs, and instead of trying to hold all that in my head, each one gets a simple plus or minus and add it up, and you get a number. Blue means long and red means bearish. So that's really simple. As you can see here, that's my full scoring matrix on my community. And it updates each week. So on the weekend, I came here on the school full scoring matrix and I just look at what is telling me. Like for example, for the following week, we will probably have a strong USD dollar. And correlated to that, we will probably have some bearishness on the correlated USD asset. Like for example, AUD, GBP-USD, IUD-USD. If we have a strong USD dollar, these assets are probably going to be bearish. On top of that, we add some factor. Like for example, I really care about the COT positioning. So I go into the COT tab that you can see here. And in this column, you can see the last week positioning change made by institution. So for example, if we have a look at EUR, we had a minus 15,000 contracts on the long side. So they removed 15,000 long contracts and they added 19,000 short contracts. Okay, each of these contracts is $1,000. So this is a lot of money. Okay, so we will probably see a really weak EUR because they removed 15,000 long contracts and added 19,000 short contracts. In fact, as you can see in the scoring metrics, the EUR-USD pair is very bearish, and the COT is confluent as well. Then you add all of these other factors, which are economic growth, inflation, jobs market, and they give us a minus 10 score. So why does this matter? If you ever been stopped out on a setup that looked amazing on textbook, and the setup was probably fine as well, you just took it against the bigger flow, against institution. So a clean entry in the wrong direction is still a losing trade. Direction first, always. You always need to have direction and fundamentals align to the asset that you want to trade. After that, as you can see, I imported all of the asset of my full scoring matrix on TradingView, as you can see here in fundamental picks, and I'm going to look at the structure that each of them is presenting to see if there are any possible setups for the following week. So when I come to the chart for the structure side, I just look at two major things. Is the asset aligned with my fundamental analysis? Like for example, if we go to EUR-USD, that we know is extremely bearish, is it aligned? Is the structure telling me that the asset is actually bearish in this scenario? And the answer is yes, EUR-USD is extremely bearish. This is the trade that I took last week. And this is the one that I would gladly take for this next week. So as you can see here, I have a little tab. This is a custom indicator that I built to help me understand the market. And it automatically draws swing points, break of structure, fair value gaps, the Fibonacci levels, the 50%. It also gives me a volume profile, and we also recognize liquidity sweep, so it's extremely helpful. Here it gives me a bias, and in this case it's a short bias because the last break of structure is short. So what I do next is just simply position myself in the most likely zone, is positioning myself in a zone that I would be happily fill. So I'm not going to be positioned here, neither up here. Looking at this chart, you can clearly see that we have a break of structure. Here we have a big fair value gap. Our POC value is up here. We also have some supply zone. This could be called a superhedron, so a little accumulation before an expansion, and I will be happy to be filled on this zone. So I do these things on every and each asset of my list, but I don't want to be filled on each asset because that would be too many trades, okay? If you risk 1% on this trade, you can't risk 1% on each and every trade. So what I do is just putting a limit and waiting to see if in the following week the price reach my zone, and if anything change in the macro perspective, then I enter. I'm going to show you the analysis that I did for all of this week. Here I haven't seen anything, and the DHF. This was last week. I haven't been filled because I moved the limit. This was on Thursday, but I already completed the week, so I was good with it. As you can see, the indicator draws the breakout structure really good. It doesn't recognize the wick, but just a full body as a breakout structure. This is a AUD, same concept. GBPUSD is extremely correlated to SLUSD, as you can see. That's NZD-USD. EURHF, the scoring matrix tells me that it's bearish, but as you can see, we have a long bias here because the last breakout structure was bullish, so I'm not going to trade it. And I do this for each and every asset. So after I did all of that, okay, you can see that's one of my favorite setup for this week. Why? Because we have a liquidity take, as you can see here, followed by a breakout structure. These ads are fucking pissing me off. Followed by a breakout structure. Here we have an accumulation zone, a demand zone, in confluence with big spike in volume, in confluence with the golden zone of the Fibonacci, in confluence with imbalance after breakout structure, after liquidity take. So I would be really happy to be filled on this zone to go higher. So we completed the second part as well. So now we have fundamental on point, structure on point, and lastly we have risk management. As I was telling you, as I told you earlier, you can't risk just 1 or 2% on each asset if you want to trade them all. So here you decide to either trade just a few assets, so maybe you got filled on 2 assets with a 1% risk and you cut off the other, but maybe you wouldn't get filled in some winning asset, or you reduce your risk. I'm going to show you my risk management on the following video, so stay tuned. If you're interested in getting the scoring matrix, UT report with the sentiment, and my indicators, my trading journal, where I document everything, and some news, calculator, and a community of swing traders, where you have an actually proven and repeatable process, make sure to join the community. You find the link in the description, and see you in the next one.